Hello traders, welcome to the video. Today we're going to be looking at the best trading strategy to make over 150 pips in US30. Sometimes you can get this like twice a week, sometimes 3 times a week. But if you get the first green day, get it twice or 3 times. And then there are other strategies that makes you enjoy a lot more. But because we are still teaching the first green and first red day, the focus for this video is going to be first green day. Okay, so the first thing we're going to look at is to look at the characteristics of the first green day. What makes a first green day legit? And they are very simple things to look at. By the time you know this, you won't need to be looking at your write-up or piece of paper because it will be in your memory, because it's very, very easy to understand and remember. So the first thing we're going to look at is it must happen at the low of the week. This first green day must happen at the low of the week. That's what makes it legit. You can't have it somewhere in the middle and think you're having a first green day. You understand me? It has to happen at the low of the week. So we have to have 2 to 3 days of dump days. That means price has been coming down before it got to that level. So it should happen at the low of the week. It could be any day of the week, but it should happen at the low, very low, and 2 to 3 days of dump days before that particular day. Then on that day, price must close above the opening price. And then the day that you are going to trade, you are going to buy at the low of the day or session open. And since we are looking at US30, of course, we'll be trading in the New York session. Sometimes London session gives us entry, but in this very strategy, we'll just be looking at the New York session. And then 90% of the trades, of course, happens in the New York session because this is the New York indices. Okay, so this is US30, and so what we're trading is US30. So what are the characteristics? It must happen at the low of the week. This is low of the week, and it's happening on Monday. This is Monday, low of this week. I have 2 to 3 days of dump days. Dump days coming downwards. This is opening price. This is closing price. Price must close above the open. Closing above the open low of the week. So our criteria is already done. Once we see that we're entering at the low of the day or session open. So because I'm going to be teaching the entry model sometime later, I just want us to be able to see these things happen first. You know what I mean? Do you understand me? So dump days, opening price, closing price, price closes above the opening price, low of the week makes a first green day. Then the next day, which is your trading day, you trade at the low of the day or session open. That's it. It's straightforward. There's no rocket science. Alright, so this second example happened on Tuesday, 19th of March 2024, which was yesterday. And also, if you see, follow the characteristics of a first green day. 2 to 3 days of dump. Oh yeah, somebody asked me that. How am I sure it's 2 to 3 days of dump? It has come down, broken one, broken the low of this previous day, another one. This one has broken the low of this previous day. That's already 3 days of dump or more. So all you need is just 2 to 3 days, and if the dump or pump is really, really high, all you need is 1. But of course, we have 3 days of dump. So after the 3 days of dump, what are we looking for again? It should happen at the low of the week. This is Monday, beginning of the week. Price must close below the opening price. This is the opening price here, and it closed up here. So we draw a line across. Of course, you don't even need to draw a line across. Just by looking at it, you can see price closed above the opening price, giving us a first green day. So we are already set to trade the next day. We are looking for a buy the next day. So on the day of the trade, what are we looking for? We're looking for entry at the low of the day or at the beginning of the session, New York session. That's where we'll be trading most of our trading in, especially because this is US30 and US30 is a US dollar indices. You get me? Let me take us through the characteristics one more time as we're looking at the charts on the screen. We have 1, 2 to 3 days of dump days. Then price must close above the opening price, meaning price opens here, trades down, and then eventually closes above the opening price, giving us a first green day. And then in our day 3, which is our trading day, so we look at the dump days as day 1, signal day as day 2, and then the third day is our entry day or our trading day. So I'll be entering at the either at the low of the session or at the session open. So that's it. Very straightforward, very simple. If you calculate this one now, this one should be like, if I even hold in throughout the whole session, I'm seeing like 260-ish. I'll probably here where it ended. 250 pips. Of course, no one is going to hold that long. As long as you break, as soon as you break structure here, which is like 150, you can actually get out of the trade. Or you can move your stop loss all the way here and hold a runner until it stops you out or something. So that's the video. Don't forget to like, share, subscribe, and drop a comment. Like and drop a comment so that the algorithm sees that we exist, so a lot more people can see this and start trading this way. And I mean, the whole economic situation on the globe is kind of dicey right now. So if you can share this and help 1 or 2 people, the person will appreciate you for life. Thank you for watching. See you another time. Peace.